morning, all, and welcome to the trade setup on BloombergQuint. I'm Niraj Shah with your daily dose of what you need to watch out for in terms of trade today. I'm afraid the news isn't the most pleasant, in fact, fairly grim on all accounts. So first, as we've been doing every day now for the last few days, some coronavirus updates. So the world cases now top the 7,20,000 mark, or with a number record deaths on count right now over 30,000, 30,800 or thereabouts. A number of cases have recovered as well, but the count doesn't seem to be too pretty. In fact, on the US side as well, the mother market that is, and which is what should concern equity market watchers, to be honest, is that the number of deaths have passed the 2,400 mark, with more than 138,000 cases detected in the United States alone. So the picture is not looking all that great. And even in India, the total number of cases have risen to 1,024. You would expect that this would happen. I think a clearer picture would probably emerge at the end of maybe 10th or thereabouts. A lot of people give out various statistics of when would the true picture of India emerge. I'm not going to get into speculations. Yes, we are a lot better contained than some of the other nations, but our numbers too are rising. 1,024 as of 9 p.m. last night, and more updates on our website, BloombergQuint.com. And now the other thing is what does this mean? So IMF has already stated that the global economy is in a recession. I quote the International Monetary Fund chief, Kristalina Georgieva. She says that we've never seen the world economy standing still. The length and depth of the recession depends on two things: containing the virus and having an effective coordinated response to the crisis. I think the effective coordinated response to the crisis, at least on the monetary side, seems to be okay. On the fiscal side, from most nations, seems to be okay. On the health side, whether we can actually develop something in time and try and combat this remains the million-dollar question. Now, the US market's corrected. We've had a seesaw kind of a move almost every single day. There was 3 days of a continued move, but Friday gave it up. So even though the US markets ended the week on a high, Friday wasn't the best of days for the US markets. The Dow, S&P, etc., all correcting about over 3 percentage points, and the futures point towards a downtick as well in the session today. So it's not looking a pretty start. If the US markets are any indication. I'll get to that in a bit, but just before I get to Asia, also need to mark what's happening to the other markets. Now, we know that the currency's gained quite a bit, so I'm not dwelling into that, but crude, pretty interesting, because the crude futures are headed for the biggest quarterly decline ever, or at least a 17-year low for crude prices as well, as they are looking at right now. When Goldman came out with that $20 prediction, almost everybody said this should mark the return, because typically dire predictions tend to mark bottoms. This time around, I'm afraid the crude prices have come lower. I'm not afraid from an India perspective, but just that crude prices coming off is an indication of the demand shock that is there in the world right now, and the recessionary trend that everybody's pointing towards. Now, keep in mind, what to watch out for this week. I think the US payrolls data comes out later this week, which is an important number after the jobless claims number was an ugly surprise. The payroll data would be the other interesting one. But from world over, the labor market data from Japan, Germany, Italy, and the EU as a whole will release the payroll, labor market data as well. So all of those would be very, very important to try and assess whether damage is much higher than people anticipate, or is it a bit more contained. However, the markets are slated to start off on a grim note. I don't think Asia has a very pretty picture across it. And the SGX Nifty, at least 7 minutes ago when I checked, was down about 200 points. So it promises to be a bad start, or a weak start, let me put it that way. Let's wait and watch how we navigate our way through that. Now, keep in mind, by virtue of the close in the negative last week, the Nifty and the Sensex have had the 6th straight weekly drop. And this is, as I read it out, the worst since 2008. So we don't need anybody else to tell us that we are in a bit of a downtrend. The last 6 weeks have told us. But the interesting bit is, and the FI flows, we finally had a positive trickle. I think this last happened on 24th February or 20th February, one of the days, I don't remember. But just look at this trend. In an otherwise very, very grim scenario, this is actually a pretty decent trend. From 5,000 odd crores of selling on the 19th, it started slowing down. On the 26th, we had 484 crores negative. And on the 27th, which is Friday, we had a positive trickle. Don't read too much into it. I still urge, don't read too much into it. But the last few days, I've been saying that the numbers need not necessarily go down, and they've gone down. So I might be wrong as well. But I still firmly believe, let's not read too much into this data right now. What about stocks that you should monitor, therefore, in the session today? I think 3 or 4. that I think are important. HDFC Life Insurance, since the Standard Life Insurance selling is over, the stock corrected quite viciously, but it's a segment that almost everybody says is good to own. So watch out for HDFC Life. Watch out for Kaya. And because Derive Investments has acquired 95,000 shares, it's the company promoted by Radhakrishnan Damani. So should be an interesting one to monitor in the session today, Kaya, even though the market might start off lower. And Delta Corp, the last couple of days has been on the upside. Now the buyback price is out at about 100 rupees per share. So do watch out for that one as well. Should be an interesting one to monitor. Last but not the least, I just want to leave you with one quote from James Montier of GMO. He says, it is pure fear that drives people to ignore bargains when they are available in the stock market, especially if they've just suffered a loss. Arguably pointing towards that if people have suffered a loss and if there are bargains available right now, people may not necessarily make use of them, urging people to make use of bargains. But you need to spot a right bargain. You might actually be fishing in the wrong pond, so be careful when you're hunting for the bargain. Thanks so much for tuning into this daily morning podcast, daily morning trade setup on BloombergQuint. Do log on to our podcast as well, by the way. It gives you quite a bit of information. And stay tuned to BloombergQuint for all your news and updates.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women buyers across the top